Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. I just want to say a happy new year to you all, and I hope you had an excellent Christmas and New Year period surrounded by your friends and your family, and I hope it was a good one for everybody. So just before I start this video, as a Christmas gift, if you could please like this video and subscribe to my channel, that would be very Christmassy of you. So today I'm going to be doing my usual video, which I talk about how our portfolio fared and also talk a bit more about what happened in the markets last week. I also plan to do a video for you this week which explains more about how 2020 went as a whole, and also discuss some of my strategy for 2021. So keep an eye out for that, and that will go into much more granular details about my portfolio for next year. Our portfolio for 2021 was up over 116% for the year 2021. I was extremely happy about this result overall. However, the first half of the year was markedly a lot better than the second half of the year. And the second half of the year, especially the last couple of months, were a little bit difficult. And this is because there was a lot of volatility overall in the stock market, and there was many events happening such as COVID-19, interest rates, inflation, etc. And also there was a lot of volatility in crypto, especially in that second half of 2021. However, I am very bullish about the prospects of 2022, and I think our portfolio is very well set up to have a really great year ahead. So please be patient for those who copied over the last couple of months, and I'm sure that we can do really well in 2022 and make some really good gains for our bees community. As we move on to the global weekly market update, and I'm going to start off with the US. And last week was generally a very good week for US indices overall. And we started to see that Santa rally over the last couple of weeks just before the Christmas period. And the S&P 500 was up about 0.9%, and the Nasdaq lagged a little bit by minus 0.1%. And generally, value stocks did very well last week, as well as utilities and some energy stocks. And it was kind of lagged a lot by the technology sector stocks, which didn't perform as well. And I think a lot of the reasons for the outperformance again last week was to do with the fears subsiding a lot to do with the Omicron variant. And there's been many studies over the last couple of weeks that said, although there is a lot of Omicron cases around the US and around the world, that the severity of the Omicron variant is a lot less than other previous strains, such as the Delta variant. However, we did see an all-time high in the number of Omicron cases, not only in the US, but also the UK and other parts of Europe. However, if we look at other pieces of more important data, we did see that the hospitalizations and the fatality rates were fairly stable. So we're not seeing a big spike in hospitalizations, which we know is the main crux of the problem with regard to COVID-19, because you don't want hospitals filled with people that are not able to be treated. So that is a very encouraging sign. We also saw some data released from South Africa from a study that they did, which said that anyone who had been infected with Omicron had built up antibodies and resistance to the Delta variant, which we know is a more severe strain of COVID and causes more hospitalizations and mortalities. So this is good news, especially for future strains as well of COVID. So it appears that the virus is weakening, and as people get it around the world, it is likely that people are going to get less sick from it, especially as the global vaccination rates continue to increase. So it's looking like this hopefully could be the year where we get rid of that dreaded COVID-19. However, as I mentioned, there have been some concerns around the lack of manpower overall in the economy, especially in the service sector. And we actually heard that a lot of airlines cancelled their flights over the last couple of weeks because staff have been affected by Omicron or have been in close contact with people with Omicron. And we've also seen disruptions in terms of the cruise liners. As the CDC last week, they also advised against the general population from going on cruise liners. And again, this was another reason why just a few weeks ago, I decided to short Royal Caribbean stock. And this is because that it's luxury travel, and it's very unlikely that people are going to be traveling on cruise liners at this time in very close quarters with other people. We also see a high number of elderly travelers as well on cruise liners, and they are the most affected by COVID-19. So I don't expect them to do well in the next couple of months at least, and I will keep that short in place for now. So as we move on with the theme of not having enough staff in the service sector, again, we saw 50-year lows last week of the number of jobless claims. And again, I think there is just too many jobs out there especially in the service sector, and they just don't have enough people to fill them. And I think the people that are jobless at the moment either don't want to take on certain types of work, or they are not qualified for specific work that is available on the market. But there is a lot of robustness in terms of the number of jobs that are being made available in the economy. We did see some data which said that manufacturing output had increased over the last month in the US. However, we did see a reduction in the number of pending houses sold, and this has been put down for a number of different reasons. And one of them is the fact that house prices are very high at the moment, especially in the US. And also there is a lack of inventory on the market, which says that there is more buyers than actual sellers. So this has an effect overall on the pending house sales. We did see some data released from MasterCard, who are a very good gauge of spending overall in the economy because everybody tends to use their card. And what that showed was that sales for the Christmas period, so for December, were up about 8.7% from the previous year. We do know that 2020 was a little bit of a slower year because of the Delta variant and because there was a lot of cases overall in the economy. However, this is still a record rise for the last 17 years. So it is showing that the economy is robust and people are out there spending money in retail stores and also over the internet in the Christmas period. So this is a good sign for the economy, and it also starts to show that maybe those supply chain bottlenecks are starting to reduce because there is a lot of stock and inventory in the overall stores. As we move on to Europe now, and last week the European indices were generally up last week. And again, this has a lot to do with the fears subsiding around the severity of the Omicron variant. And we saw record highs of the number of cases in the UK, Italy, France, Spain, and Portugal. We also saw some increased tightening measures from Italy, France, and Portugal, especially before the New Year's Eve celebrations as they tried to contain the number of Omicron cases. They also put in place some work from home measures, which they hope with people not going to the office, that they are less likely to spread around COVID-19. The Spanish and the Italian governments also approved their 2022 budgets. And we actually saw a record budget spend of Spain, in which they anticipate to spend over $240 billion in 2022. And this should go some way to stimulating their economy further. Fears are also continuing to mount over the territorial dispute between Ukraine and Russia. As we know, they have been locked in this territorial dispute for many years. However, there is increased fear that there could be military intervention. And last week, President Biden said that he plans to have a conversation with Vladimir Putin in the near future in which they talk about how that this could be possibly resolved. And he has said that the US is willing to take decisive action if the Russians plan to invade Ukraine. So it's something to keep an eye on, and it's something that could cause some fears in the market. However, it's not something new, and it's something that's happened for many years. So it's not something I'm particularly concerned about at this time, as I think that there is a lot of political jostling. As we move on to China now, and last week the Chinese stock market was down a little bit overall for the week. And 2021 was a very difficult year overall for Chinese and Hong Kong related stocks. And the Hang Seng Index, which is the index for Hong Kong, was down about minus 14% overall for the year. And this is the worst performance for over 10 years. However, I do have a lot of positivity going into 2022. That is because the valuations are beginning to get very low for Chinese stocks. Of course, there are a lot of political risks involved, especially as the governments continue to put in new regulations in place. However, I think that the majority of these are out of the way. And one of the good things about the Chinese stock market is not only is it starting to get very undervalued, but the Chinese government are continuing now to increase stimulus into the overall economy, especially as the US and European economies are starting to conduct tightening measures. And it is the complete opposite for China, as they are starting to put in expandatory monetary policy for their country. The Chinese Regulatory Commission also announced that last week that Chinese companies that want to IPO in foreign countries, that they need to register with them first before doing so. This has been seen in a mixed way by many different analysts. Obviously, one of the bad things is that there could be a lot more scrutiny on Chinese companies before they list abroad, and we may see the number of IPOs reduce a lot in 2022. However, one of the really positive things was that nothing was mentioned overall about the contentious VIE structure in which many companies such as Alibaba and JD.com are listed under. And also there was no outright outlawing of listing companies abroad. So this is also seen as a very good thing, and that Chinese don't want to stop these listings, but they just want to regulate them. Data released also showed that industrial companies also grew in the month of November if we compare that to the previous year. However, it did slow somewhat from October, and the reason for this is to do with the Chinese housing market development slump over the last few months. And as we know that many Chinese property developers have got themselves in big trouble, and this has led to a slowing of many industrial projects throughout the country. And this shows why the industrial figures are lower. As we move on to our top 3 performing stocks last week, and in number 1 was Innovative Industrial Properties Inc., and that rose over 4.78%. And this is a property REIT which deals in the cannabis sector. The second best performing stock in our portfolio was Medical Properties Inc., and that rose about 4.28% last week. And this is another real estate REIT which rents out properties overall to the healthcare sector. The third best performing stock for last week was Canadian Natural Resources Company, and that grew by 4.28% last week. As we move on to crypto now, and last week Bitcoin was down about 6% overall for the week, but not much has changed really, to be honest with you. And Bitcoin is still kind of ranging in that 45 to 52,000 range, as it has been for many weeks. Last week we got up to about $52,000 per Bitcoin. And as I've been stating before, it's very important that we break over 53,000 because that is the average short-term hodler's price. However, we failed to break through that, and now Bitcoin has gone back to its mid-level of the range at about 47,000 or 47,500. So it's very important that we keep an eye on that we continue to make strides to break through that 53,000 level. And it wasn't a surprise to me too much that Bitcoin reduced last week slightly. And again, what happens at the end of a year is that many hedge funds and institutions, they rebalance their portfolios. And also at the end of the year, they also start to do tax harvesting around the world. So people are closing out positions which are not being profitable in order to save money on tax. We could see some more buying, especially from institutions in the first couple of weeks of January. So it's worth keeping an eye on that as these institutional investors rebalance their portfolios. Last week, we did see some bullish news actually, where Michael Saylor bought another 1,914 Bitcoin for MicroStrategy. And that takes his total up to over 230,000 Bitcoin. Yes, that's right, 230,000 Bitcoin that is on the MicroStrategy balance sheet at this current time. And that actually equates to over 0.6% of the whole Bitcoin supply. And this really shows that this is the highest conviction bet of the century. And it's going to be extremely interesting to see how this plays out. But I have a feeling over the next couple of years, this is going to work out a masterstroke. Last week, we also saw some data released from CryptoRank, which is an analysis website, which said that only 6% of the Bitcoin in circulation is actually residing in exchange wallets. And this is seen as a very bullish sign because that means that the vast majority of Bitcoin hodlers are holding their Bitcoin in private cold storage wallets. And this means that they are much less likely to sell and they are not trading this on a day-to-day basis. So we could see a supply squeeze over the next couple of months. It was also announced in a report issued by the Polygon team that a white hat hacker had found a vulnerability in their 𝗳𝚷 contracts. And this could have meant that it may have been vulnerable for a hacker to exploit and take the Matic tokens. However, this has now been patched by the Polygon team and it is not expected to have a problem in the future. The Polkadot protocol also started the second round of the parachain auctions on the 23rd of December. And this is after a very successful first round of the parachain auctions. And this second round of the parachain auctions is due to last for about 12 weeks and have about 12 participants competing for new parachains. And this is likely to drive a lot of value again to the Polkadot token value. And I expect to see an increase of price over the next few weeks. Not only do I see that Polkadot has a very good long-term future, but it also may in the short to medium term have some good headwinds behind it as well. I think overall in crypto, we need to stay patient. And there's a lot of people saying that this could be the start of a bear market. And I think the reason why they're saying this is because of the market timing in the cycle. And I'm not looking particularly at this in great detail. And the reason why is because I'm looking at to see how the market behaves as a whole. Usually what you see at the end of a crypto cycle is that you start to see these blow off tops. So you see a very fast increase in the overall price of crypto before a prolonged bear period. And I haven't seen that overall in the market. Even when we hit all-time highs, it was very muted overall in sentiment. And I think that in Q1 2022, it's going to be a really great quarter overall for crypto. And will continue to trim our crypto holdings as the crypto prices increase and diversify into other areas in order to keep our portfolio very robust and safe. Thanks very much to my community overall for the patience. I know that the last couple of months has been a little bit difficult overall for the stock market, and also for crypto. And some of you may find your copy being read momentarily. However, it's very important to think in a long-term perspective. And I'm very confident that over the long run, I can drive good returns to you as investors. And those who have been copying me for the longest tend to have the best returns. And it hasn't always been just completely up. We do see some speed bumps sometimes in the market, and it's very important to ride through them. Thanks very much for listening to my video today, and don't forget to join my copy community on Discord, where we have loads of great discussions on a daily basis. Have a good week ahead.